This segment is going to discuss the preparation of the budgeted income statement. Previously, all the budgeted revenues and expenses had been budgeted within the operational budgets. With those budgeted revenues and expenses, we can go ahead and prepare a forecasted income statement. The information that we will need to prepare these remaining financial budgets will come from the previously prepared operational and cash budgets. Really, most of the budgeting work has already been done leading up to this point in the budgeting process. Now we just need to pull together parts of information that applies to the company's calculated and budgeted upcoming period's income. In order to prepare ABC's budgeted income statement, we're going to start with sales. Sales would come from their sales budget, where we had already budgeted the amount of sales expected for the 3 months ended December 31st. We subtract out the amount of cost of goods sold, which comes from the merchandise purchases budget, to calculate the budgeted gross profit. We then subtract out all of the operating expenses from the selling expense budget, the general administrative expense budget, to include equipment depreciation, which we had not needed to include in the cash budget because depreciation is a non-cash expense. We calculate or add in the amount of interest expense that we prepared in the cash budget to calculate a net income before income taxes. Using the budgeted income tax rate of 40%, we can calculate the amount of anticipated income tax expense, thus we can budget for the anticipated income tax expense, thus calculating the budgeted amount of net income. At this point, we have now prepared the budgeted income statement and the budgeted cash statement.